In this presentation, we're going to take a look at the relationship between sales receipts and bank feeds. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're going to be opening up our reports once again. We're going to go to the reports down below. We'll be opening up our balance sheet. We're going to be changing the dates on the balance sheet from January through, I'm just going to make it all the way up through December 12/31/20. We'll go ahead and run that report. Right-click on the tab up top to duplicate that tab. Right-click and duplicate. Back to the tab to the left. Then I'm going to be opening up the old hamburger. Back to the reports down below. Opening up our second favorite report, that being the profit and loss, the P&L, the income statement. Then we're going to change the dates up top just for the month that we're working in. That's going to be 04/01/20 to 04/30/20. We'll go ahead and run that report. Then I'm going to right-click on the tab up top once again and duplicate that tab. Then we're going to go back to the tab to the left, and we're going to open up the old hamburger. We're going to be going down to the banking section where we have one last deposit to work with. So one last deposit here. Now we're going to go to our flowchart just to consider the next option we're going to have with regards to the deposits from customers. We took a look at the invoicing process. Let's imagine now that we're in a store, like we sell guitars at our store or whatnot, or other things. Let's just say we sell things at the store and someone comes in and it's going to be buying things from the store. We may then, of course, be using a sales receipt. We would like to track the sales as we go, possibly, obviously, provide the receipt from our system at that point in time as well. So in this system, we're going to record a sales receipt, which will typically be increasing the sales, and the other side going to cash of some kind, but we don't typically put it directly into the checking account, because you can imagine if you're sitting behind a cash drawer, a register and whatnot, and you're getting paid in different formats for different types of sales, then you're gonna be taking that cash, and when you go to, and you can't just put it into the checking account because it's going to be grouped in completely different ways. At the end of the day, you're going to have to take that money, go to the bank, and then deposit it. So in this situation, you almost have to use that kind of undeposited funds format rather than putting it directly into the bank when you receive it. So what we're going to do is collect all the money we're going to imagine during the day. Then we're going to take that money, we're going to go to the bank and deposit it into the bank in whatever format we have in it. And that means it's going to show up on the bank statement in that similar type of format. And we could do the same thing with when we did the invoice, then the receive payments. When we get the payments and we receive them, if they're not going to be batched in the same format that we expect to see them on the bank statement, we might want to do the same type of process. These 2 points could be at the same point. This one, you almost have to use undeposited funds if you're in that type of business. This one, it just depends on whether or not your deposits will line up to what's on the bank statement. If they will not, then you want to use a similar process, use undeposited funds like we'll show here, and then match the deposits up, put them in the deposit, match that up with the bank feeds. Okay, let's take a look at it. We're going to go back to our tab. We're going to then go to our drop down and let's add some sales receipts. So let's say we're in our store, we're making sales in the store. It's a good day for sale making. And I'm just going to make a couple of these. I'm going to make them all as a 4/1. And I'm going to make the first one to, let's just make them all to Anderson. So they're different sales, but all to Anderson. I'm just going to put the description, service. I'm not going to be dealing with inventory. Obviously, we could include inventory in the calculation if we're using this method as well, which would be requiring sales tax. So I'll take the sales tax out of it for the example. First one we're going to say is for 1,000, right? We're going to make that. The sales receipt then, once again, will be increasing, in our case, the undeposited funds, and the other side going to revenue. We could put this to the checking account, but we can't really do that if we're getting things like cash and whatnot as the payment, because it's not going to show up in the same format on the bank statement. Therefore, we're going to put it into undeposited fund, take that grouped income, deposit it in the bank as we expect it to see on the bank statement. So then I'm going to make another one. I'm going to say, all right, let's do save and new. And I'm just going to make them all to Anderson so it'll make it easier for us to see them. And so I'm just going to say this is Anderson. And then again, I'm just going to say, stuff. And this is going to be amount of 500. So let's say we made another sale, 500 on 4/1, and we're collecting this money in some way, possibly cash. And then we're going to say save and new. And let's see the next one. Once again, we're going to say it's Anderson. So I'm going to say Anderson and stuff. And we're going to say that it's for 300. And then one more. Let's go save and new. And we'll have one more that we're adding up to our 2047.50, which is our deposit. So we need one more to do that. Anderson. I spelled it wrong. There it is. And then if I scroll back down, we're just going to put in, I'm not even going to put in 247.50. So all those invoices will tie out, or will add up to, not invoices, sales receipts will add up to the 2047.50. They all went to undeposited funds. Let's check that out. If I save and close, go back to the balance sheet, and let's open up, let's refresh this thing. Let's go ahead and refresh it. That's probably the best thing to do at this point. Now I'm going to close the old hamburger, hold down control, and scroll up a bit. So we're at the 125. That's where I like to be, the 125. So if we go down the undeposited funds, here we have all the undeposited fund activity. And if we look at the 4.2, that's where we put our, or 4.1, here's Anderson, increasing that undeposited funds. It's not a cash account, but it is kind of a cash account, but it's not like a cash type account for QuickBooks. But it's going into that item. So that's kind of a holding account. The other side going to sales. So if I go back up top, that's going to be recording the sales. So if I go to the P&L, the profit and loss, open up the sales, hopefully it will refresh as I open it. I'm going to close the hamburger as I'm waiting for it to refresh. There we have it. There's our sales receipts. So it's in the format of sales receipts. And there they are, other side going to undeposited funds. All right. So now going back up top. The second part of our process here, as can be seen with the flow chart, jumping over to the flow chart, would be to take the sales receipts and then to group them together and deposit them. So we're going to deposit them all grouped together now. So let's do that. And in terms of the balance sheet, that means that undeposited funds is going to go down by that 2,047.50, and then we're going to be putting it into the checking account for that amount as well. Okay, let's go back to the first tab, and I'm going to, is this recorded? Yeah, I'm going to close this back out, hold down control, scroll back down so it doesn't do anything funny, select the drop down, hit the plus button, and we're looking for now, we want to make the deposit. So we're going to record the bank deposit in the other section. I'll make the deposit basically as of the same day. So we go to the bank at the end of the day, we're going to make the deposit. And we have these items. There they are. Anderson for the 1,000. There we are. These aren't checking off. Why didn't that check off? And then we got, and then I'm not picking up the music store stuff. The 1,000, the 500, the 300, the 247.50 add up to the 2,047.50. That's going to be the deposit we make. So what's this going to do? Increase the checking account by the 2,047.50 and like that one lump sum, which is what we're going to see on the bank statement. And the other side is going to be decreasing undeposited funds, showing the detail of all the sales receipts or the deposits related to them. So let's go ahead and save and close that and check that out. If I go back to the balance sheet then, and we go up top, I'm going to hold down control, scroll up a bit, up to that 125, and then go into the checking account. And then if I go down to the bottom, I'm looking for this deposit. And so we have the deposit here. There it is at the 2047. And the other side's on the split. So the 2047, I'm going to open that up. That takes us back to the deposit screen. Closing this back out. Now, why does the other side say split, you might ask? You know, because it should all be going to undeposited funds. And it is. But when we go into undeposited funds, it's not going to be recorded with one transaction. We're going to get to see the detail in the undeposited funds. So if I go into undeposited funds then, and I look at that, it's down at 4.1, I believe, was when the transactions happened. Then we have the deposits going in here. This deposit, this deposit, this deposit are broken out. The total deposit is 2,047.50, but it's broken out between the 1,000, the 5, and so on. So if I open up any one of these items, let's open up the $1,000 amount, it'll bring us back to that deposit, which was a total deposit of 2,047.50. Why? Closing this back out. It would do that because we can then see the increases and the decreases. So I can see the increase here and the decrease here, the increase and the decrease. So I can tie it out here, and then on the cash side, it'll be in there at one lump sum, which should tie out to the bank statement. So then what we have done then, we've done the full process. We entered the sales receipt, and then we put it in the bank already. So the deposit's already reflected in the books, and it's done so in the format we expect to see in the bank feeds. Therefore, when we get to the bank feeds, we're just basically double checking. We expect QuickBooks to be able to match out the bank feeds to the deposits that are now in the books. So I'm going to go back over here and go to the first tab. And then if we go to the bank feeds, you'll see now it says, hey, there it is. We matched it out. So this is more like we're using kind of like the full service type of the normal process for the revenue side of things. And we still may be using a cash basis for the other side of things. And we're able for the payment side of things. And QuickBooks is able to tie this out. So it says, hey, we see this record here. If I open that up, it's in the match field. It says we matched it. We don't have to go and hunt around and find it. Why? Because we properly used the undeposited funds, put it into our books in the same format we expect to see it in the bank. And if we do that, then QuickBooks is going to be pretty good at matching out the amount, because if we don't have like the same amount all the time, which typically isn't the case when we make multiple sales, it's going to be some funny rounded, it's not going to be a round number or whatnot. QuickBooks can basically pick that up and tie out the amounts, and it's going to be right, a lot of the time, just basically based on tying out the number that's in the deposit to the number that we have in the system, and maybe even defaulting back to the date if it needs to. So it matches it out. We're not going to record anything new here. We already recorded it. We're just tying it out to the bank feeds, and it's not going to double record it. That's what we don't want to happen. We want to make sure we have a system that we're not double recording it, so we can recognize what's in the bank and what's on our books and tie that out. If we mess up, there's still another kind of check on this. What is that? The bank reconciliation. So if we did duplicate something or something like that, we may be able to catch that when we reconcile with the bank reconciliation. So I'm going to go ahead and say, yeah, that's it. Let's match that. And then it'll tie that out, and now we've recognized everything for the second month.